Hey everyone, CryptoVatsik here. Thanks for joining. Nothing of what you're about to see is considered financial advice and they're just my opinions. If you enjoy this content, please give this video a like and don't forget to subscribe to the channel. Let's get right into it. Okay, got an exciting update today on Verasity for you. Since my last video on it 2 months ago now, there's been a lot of development, so let's drill right into this. Here's a quick snippet from that previous video, and if you missed that previous video, I suggest going back and watching it because it explains clearly why I was targeting this area down here below 0.005, otherwise just this dashed line here after a potential push up past red to resistance and then expecting a breakdown. And so if you missed that video, like I said, I suggest going back and watching why I anticipated a move like this. But if you missed that video, it's okay because I'm going to give a thorough update in this one too. So here we are back at the current chart where we were trading at the time of that previous level over here. So we did in fact get a very nice push up past red, and actually more than I anticipated, with a major deviation actually above my resistance level. But you will notice we came all the way back down and we did correct in fact to my level here in the dashed line just below 0.005. So it's great to see that the move played out, but as I say, that's in hindsight now, so let's move on and conduct the analysis in this video with a clean slate. Okay, so first off, real quick, I had marked out resistance here in red, and we had some very beautiful consolidation underneath that level. So however you want to draw it, either as a triangle potentially from the candle wicks, or if you want to look at it like an ascending wedge from the candle bodies, those are two ways you could have anticipated this consolidation to break to the upside on account that we broke the actual wedge itself. Or perhaps you were looking for this larger move and get an SR flip of prior resistance into support. Meanwhile, we were making higher lows either on the wicks as well as the bodies, and we were putting a lot of pressure on resistance with all these liquidity grabs right here, as well as above the 200 exponential moving average here in the solid gray line. So I had said in that prior video that I wouldn't be surprised for continued bullishness. And even though I thought originally that we probably would have failed out somewhere in this zone, and we did in fact deviate well above that level, it didn't change the fact that I expected us to revisit this low. And so why is that? Well, there's a couple of really big reasons why. One was because that it was an untested market structure break on the high time frame. We had truthfully untested this major market structure break that we had from this prior swing failure, otherwise lower high. And so I took this dashed line and I drew it right over and I said eventually I think that line gets revisited. And just to clarify that, when you get a market structure break that breaks a bearish trend, something like this, you get a bearish trend down and then all of a sudden you get your capitulation event, you get a market structure break, and you're seeing price like this. Your market structure break is in comparison to this lower high on the bearish downtrend. You've made a fresh new high. So your expectation is you'll retest that market structure break level for a bullish trend reversal. So on a high time frame, we had not revisited that level yet. Let's drop to the weekly. Okay, so here we are on the weekly. Here's that lower high. Here's the nice rally that we got pushing up to our high. But these two wicks here are not valid retests of that level. There is a liquidity zone here, otherwise known as a void, of untested territory. But on this wick that we got here on this weekly candle, that is valid. And another thing I'll quickly point out as well was it was a former bottom that we had, which when it was lost, we had a basic bearish underside retest of that lost level, with on the weekly here only a wick up to that lower high that we had. So there were two areas of confluence in there, and I'll bring in a third here on the daily chart again. So it's just a minor area of consolidation right here in yellow, but to see it clearer, we'll drop down to the 4 hour. Okay, so here we are on the 4 hour of that consolidation range. And though it was very brief, we did form a range here until we eventually smashed out of it, breaking the range high and pushing further. So when I saw this range, it was really the only level I could spot on this move up that had an area of interest for me. And it just so happened to line up with that major macro market structure break level on the dashed line, as well as that previous structure level on the solid line just below it. Otherwise, price was pretty much just straight vertical, below and above. And so you'll notice really all we did was just come back down and we just retested that previous range high. So a few areas there of confluence why I thought that we would come back down to that zone. Okay, so we'll drop down to the daily again. Okay, so like I said, very powerful move. Initial market structure breakdown here that led to the breakout, consistently flipped levels, went vertical, broke out of this wedge here, breaching red on the next leg up, and then to our ultimate high here with an SFP thereafter and pretty much V reversal back down. Major deviation again below red with a massive buyback to close the candle within that zone. So huge attempt to maintain that level by the bulls, but it was lost and pretty much just a steady decline down to the buy zone here with a pretty decent rally up back to red after. So what does this all mean now looking forward? Well, if you remember from that previous video, I had said that I wanted to see a reaccumulation phase and that it was possible we had already seen our forms of initial accumulation, but I am closely trying to spot those reaccumulation phases where I had said price would likely come back down to my level. It would probably have a very nice bounce, but then I wanted to see that reaccumulation with possibly a couple more tests of this breakout structure for an eventual following leg. But the key being we do not break below this reclaimed structure. And we'll just go ahead and make that level yellow now. So truthfully, all I'm seeing is a bearish underside retest of red now. Yes, we're trading back above these EMAs here, but I'm not convinced that it's going to hold, and I wouldn't be surprised if we come down to revisit this low that we had at least one more time for that reaccumulation phase that I am looking for, because essentially that's a major reclaimed structure that we've got now. This was a base that had formed since all the way back beginning in July last year, and then arguably September through November over here. That's a decent amount of time that this level chopped around at. So for me at this point, yellow is a must hold for the reaccumulation phase to be valid. You will typically see massive bear market rallies like this, especially on altcoins, that will almost retrace completely, and it's not uncommon. It fakes a lot of people out up here into thinking that the bull market is back, when in fact it's not. We're just entering that reaccumulation phase. Okay, so I just dropped back down to the weekly here. I think it just gives a good picture, and I want to drag yellow across as a reminder of that level that I want to hold. It was definitely an order block of sorts on the weekly time frame here for some time, as I said, until we deviated below the range with an eventual reclaim of it. So I'd be perfectly fine on this bearish underside retest of red to get a candle close actually towards yellow. You'll notice on this weekly candle here, it's only a wick. So wouldn't surprise me if we get continued downside for the short term, and we in fact candle close even potentially within yellow. I would accept essentially a wick below yellow that is quickly back up with a very nice reaction afterwards as essentially holding yellow. At the most a wick. I will not accept it if a candle closes below outside of yellow. For me, this is the ideal scenario because it will give another opportunity to accumulate lower. Now, if we go back to red, essentially, which is resistance again now at this point. Like I said over here in that previous video, on a breakthrough red and retest, I said I think we push higher. So same thing now, nothing's changed. Maybe perhaps we hold this structure and we break through next week, reclaiming red. That would be bullish. Game on, break this high, make a new high, reclaim the level, bullish retest, target the local high. And like I said, on account that we break this local high, then I just look at those key monthly levels that I had marked out in my prior video from right here, over here, and down here. I personally think that something new and unforeseen that is very negative would have to come into the market or happen to the market as a whole for us to breach this low. If you see price start to do this, and then you go, I'm going to accumulate up here, and then it's back down to the range low again, and then you wait for the next pump, and then you go, oh, you got FOMO again, accumulate up here, and then it's back down. Meanwhile, all we've been doing is just that reaccumulation phase. So do your best to accumulate at the lows, and it essentially just means manage your emotions. Okay, so I just dropped down to the 4 hour here to break this down a little bit further. We got a nice structural level right here that I'll mark out, breakout origin at that level right there with our decisive reclaim here. This price action here was not decisive enough for me, but on account we broke right through clearly with confidence, and a bounce with high demand thereafter is acceptance above the level for now. So if I'm looking for longs, I'd be watching that level with a breakout structure, as you know, and back up to the range highs and possibly above red at that point if the market allows it. If we come down and we show weakness, we breach below, then I'm just looking at the range low. Possibly we get a double bottom formation here and then it's back up. That would be a nice move because you'll notice we're right back inside that yellow zone again at that point, toying with holding that support level. Very much a rounding top formation right now, which doesn't look the strongest, but sometimes they can have a spring action with a very powerful move up. So it's a potential scenario I'm watching, but again, all the while looking at this key structural horizontal I have here. I do not see a market structure break at the moment here on the 4 hour. So we have a high here, a lower high, and this is just messy. The only next lower high I can really identify here clearly is right here. So if it's not clear and you're taking it from one of these wicks in here somewhere and you're saying, oh, we made a higher high on this wick right here, we made a market structure break. If it's not clear, just sit on your hands and wait. This price action in here, it never made a high. There was really no 4 hour rally in here. This was our 4 hour rally here, but ultimately making that lower high on the overall downtrend. So I'd expect at least a revisit of at the least this low here. So you come down and say, for example, this low does hold. We get our next clear lower high with an H4 break of that lower high, making a fresh new high, market structure break, and bullish retest of that level on the upside. It's a classic trigger. It's a great setup. Stop loss below the low and target the high. This is a H4 swing trade, so a bit lower time frame. This is not an accumulation strategy, just a trade setup if you're interested. And the reason why I'm only going to cover long right now on the H4 is just because I'm primarily looking for longs. I think after the correction that we've had in the grand scheme of things, we should see more of a push, in my opinion, because in the grand scheme of things, we've had a pretty major correction on a lot of altcoins after a major pump. So I would not be surprised to see us trade within the lower range and then break that EQ up to the range high again at some point, like I said, for that reaccumulation phase. I apologize if my writing is getting messy at this point. I just like to spill my thoughts out onto the chart. All right, guys, that's just a quick update since my last video on it. Like I said, really happy to see that the move played out. I hope some of you were able to catch it, at least from here, this point on. If not, that's okay. There's going to be infinite opportunities ahead of you, and you can't catch every trade. So hopefully you enjoyed this update. Hopefully it was helpful to you. Just gave the high time frame perspective of what I'm looking for over the next few weeks and months on Verasity. I want to thank you all very much for joining. I really appreciate the engagement. Let me know what you think in the comments. And if you're new, don't forget to subscribe to the channel. As always, we'll catch you next time.